com. We're going to take a look at the markets as we usually do at this time of the day. Gonna provide you guys with a quick update on the currencies like the euro. You got Bitcoin, crude oil, DAX, and so on. Today as well, I want to remind you guys that later on today we're going to host a special webinar where we're going to provide you guys with the live coverage of the Canadian non-farm payrolls. So if you want to know more about that, click on education and webinars and you'll see it on the top. You will need to register, and when you register once, you will actually have access to a series of different sessions where we're going to cover live markets. Yesterday we covered the Eurozone inflation report. So let's begin, but as always, I need to stress that trading financial markets is unfortunately risky. There's a genuine risk that we'll lose all of our invested money, and if you're trading with leverage, you can actually lose more than your invested money. As well, I'm going to share with you guys my view on the markets. I've been doing this since 2006. I even worked for a big Swedish bank, and I worked for one of the world's biggest broker on the retail side. But doesn't mean that I'm always going to get it right. In fact, most traders actually get it right about 60% of the time. So the key to success because of those ratios is that when you have a profitable trade, that is bigger than your average losing trade. So let's begin with the euro. So yesterday in the euro, even before that, when we were trading up here, I said let the market come down and let's go long. So we said let's go long at 18.50, and as you can see, the price is right now at 19.24. So we had a nice little push to the upside, took a day or two, and I think now going forward it's going to try to challenge this high. Why? Because the overall trend is bullish, right? So most likely it's going to try to challenge this high. If it takes out the 1961 level, it can go to 120. And traders that are not already long then, how can they do to partake in this bullish move? Well, most likely they're going to wait for a pullback down to 1868. Around here, traders that are not long are probably going to look to potentially buy. The reason for it is because we're just above the low from yesterday, which is the new trend defining low. You see we create a low here, then another low here, and this is the 1797 level, and as long as you're above that level, I suspect the market can go up. So from a risk to reward ratio perspective, the potential gain is 94 pip if it just hits the high. If it hits 120, we'll make 139 pip. At the same time, we'll be risking 70 pip. So you can see here that the gain here is bigger than the average or than the potential loss. However, take this level out, then this market could potentially target 1710, and if that happens, I'm gonna turn neutral. Here's the price of Bitcoin, and yesterday, you might remember actually, you know, we said here a few days ago, look to go long here, and in fact we said look to go long quite a while ago actually, before the November decline even. And the idea I shared with you guys yesterday is that if we move down to these levels, which is 93.54, then traders could look to go along. How did I derive that level? Well, firstly, I look at the trend. You have creating higher and higher lows, and the last interesting support level is this level down here, which is the 78.42 level. So as soon as you start to approach these key levels, if it's a genuine trend, the market is going to try to bottom out. A second thing that I did is I just took a Fibonacci. So I took Fibonacci from this low to this high. This gives me all these three different levels. And the market moved all the way down here and then it bounced up, and I said if it comes down to these levels, I think traders are going to go long. Surely they did. So price bounced from 93.54 and now it's at 98.18, and we're not necessarily out of the woods because you can see that the market is still in a short-term downtrend, and as you know, everybody's super excited about crypto coins right now. That I am getting a little bit worried because usually when people get super excited, then that's when you tend to have at least like a short-term high. But for now, we're gonna stick with the trend. So we bottomed out here nicely, and the market could, because of this little downtrend, push down a little bit, but eventually I suspect it's gonna go up again to 11,250. And again, it can go down, it can spend a week or so trading sideways here, but as long as you trade above 78.42, there's no real reason to change the outlook for Bitcoin because the trend is going to remain bullish. Now here's the price of crude oil, and crude oil as well is guided by this lower and lower highs. And a few days ago I said, when we're trading up here, I said look to go long at 57.69. Actually, I said 57.50 I think at that point, and then I adjusted that up higher to 57.66, and we touched these levels, and move all the way down, all the way up, and then bouncing back and forward. Why? Because there's a battle here. The short-term trend is meeting up with the big picture trend. And for now, it looks to me that the buyers are winning. But again, we're not out of the woods yet, and we need to take out these highs. So this market could come down, plunging down to 56. If we trade below 56, I'm going to abandon this bullish view. But again, given the overall bullish trend, the market should stabilize as it's done so far. And not only stabilize, it should potentially push to the upside again. Now here's the price of gold. Here, unfortunately, gold failed. My idea was that the market's trading slightly higher and higher and higher, and maybe if you wanted to, you could go long around 1280 with watching 1273 as a stop level. At least that's what I thought the market would do. But you can see here the market just came down plunging and didn't really respect this. And it's the second time here we get into trouble in gold. So I'm gonna ignore it. I'm gonna zoom out. I'm gonna look at the daily chart, and I'm looking at the daily, and I see that we're in a big mess. And then when it's a messy like this, it's very difficult to make any profits. I like nice moves to the upside or nice moves to the downside. So here, on a break to 1263, I'll turn bearish. In fact, I think it can go down to maybe 1235 at that point. And if it breaks above 1299, I'll turn bullish. So that's my take on this market, and given the way this market has been trading, it's going to be stuck here for another week or two until we have any sort of breakout. Finally, this is the DAX 30, and unfortunately it's coming down under huge pressure. And here we will look into turn bullish from these levels, and unfortunately, as you can see here, it slipped below the key level. Initially I was bullish above this level, but as the market moved up higher, we reduced it to this level here, which is 12.901. And there's not too much to do about this right now. Sometimes it is like this. It's a market that is strongly deviating from other markets, such as the S&P 500, which I also watch. And sometimes this happens. So what are we going to say about this going forward? Is this a major reversal? I don't think so. In fact, it wouldn't surprise me if it would bounce back to the middle of the range. So I'm gonna watch this level here, which is the 12,842 level, and this are the highs. And it wouldn't surprise me at all if it bounces back up to the middle. But I learned this over the years, is that if you get it wrong on one market, like I got it wrong here, jumping straight into the same market the same day is usually not a good idea. You tend to get it wrong again. So what I'm going to do here is that these are the different levels, but in my own case I wouldn't really get involved here just because I got it wrong the first time. And again, when you made it wrong once, it's very likely you do it wrong again, and definitely if you have two wrongs in a row, you get it wrong on the third. Because trading and analyzing markets is a little bit like trends. Sometimes what happens is that you're gonna do very, very good returns, and the market is just gonna go one way, and then the same way, if you start to make losses, if you continue to trade the same market, you usually just lose more and more and more. So the idea is to cut things off directly at the first failed outlook, and then you give it a day or two, let the market mature, let the market tell you what it wants to do, and then you get involved. And that, guys, covers today's market updates. Don't forget to check out this webinar I mentioned. So click here, education webinars, and today at 9:15 GMT, sorry 1:15 GMT, so 1:15 p.m. We're going to take a look at the Canadian labor market data. Last time we looked at the Canadian labor market data, we said look to sell for it to decline, and it worked out very well. So join me for that if you would like to. It's very straightforward. You just need to sign up here. When you have done that once, you'll have access to the event we have on Tuesday next week, which is the ISM non-manufacturing composite. Then we're going to do the ADP. Now, because I'm traveling to China this week, I'm not actually going to be able to do the non-farm payrolls in December, but we'll try to do it in the next month, January. As well, you have other webinars. These are more educational. Sorry, not these are totally different cryptocurrencies. So check this out. We have a lot of different things, and try that out. Okay, guys, thank you so much for joining me, and I hope to see you guys for the Canadian NFP later today. Thank you.